Which seven?
Look, look.
And we're live. Hello, hello. Happy Saturday, everyone.
So how do I lower the volume? Do you know? Oh, I'm gonna say we're still good over here, but no, it's froze.
Hmm. There we are. Okay, guys. I just want to welcome to Tia Pan. Life and Solutions by Pan Company. I'm Pan Contreras.
And I am Diana Salazar with Life and Beauty Financial Advocate.
We work together. We're partners, and we are here to follow up on some questions that we have from our viewers. And you'll see us come on periodically as are being asked because sometimes we don't have to, but we are going to get on and address the questions. Our first question, Diana.
Alrighty, ma'am. So the first question is, what is modified endowment contract, and how is it used?
A modified endowment contract is normally the amount, a maximum amount that you're allowed to deposit into a difference of policy. You will actually get charged before you will actually get charged taxes on it, because your insurance account can, or your insurance policy can provide some additional savings for you, either the index universal life or the whole life. However, there are maximum amounts, and you want to make sure that you don't exceed the guidelines. The guidelines that will be required to pay taxes um, for those funds that are in that account. And whenever you are depositing extra into the carrier, and we can do that for clients, we can cover you and find out so that then with that.
Okay, great. All right. So before we go on, next question.
Uh-huh.
Once again, just like Patricia said here, I so often so don't feel like it's a draw. You ask a question like, "Oh my God, I don't know now if there's a sense that you feel like, oh my God, this answer right away." Just say don't we will get back on. Okay,
Definitely.
so you offer paid policies.
Prepaid policy. A policy that you can pay upfront, yes. We have different terms for you. It just depends on how long you want to take that policy. Years and 10 years, 20 years. Just like your agent will make sure that they go ahead and access that as part of you, so that taking care of it you're asking for.
Mhm. Okay, now do you have that plan?
We do.
And so the next would be a two questions in one. So does the plan expire when something happens? So if it's a plan for a family of six, someone has the rest of the time.
Well, some you will stop being in existence. Something happens. After my step passed away with the joint policy. When he passed away, they said that it was going to cover her death benefit. And when we went to go look, it was no longer available. So it carriers what they do is they add on riders and operation. Again, that's why it's important make sure that you read your document every year, that the plan that you have is available for you, to make sure that it's available for you when your goals, you want it until age 50, or you want 70, or make sure that they're available for you. Review every year with your agent. We do provide extra free. We're pay 721. Just reach out. Link at the bottom of the speaker. We'll schedule for you in person, and we'll review for you, and also to make sure that you don't have the what your family. And we will go ahead. You know what we have available, and informed. That's all it's about. As far as we're concerned, Life and Debt Solutions is just to give you that additional education. So we do provide every Wednesday evening an overview for folks who aren't familiar with the types of products that are out there. You can come in, join us at 7 p.m. We start at 6:30, but 7 p.m. is when the class actually starts. We do a little bit of networking before, so you come a little early for the class, and how the products work, and that's it. No obligation, commitment to join or purchase. It's just to provide if you're interested in the product, obviously. If you're interested in making some additional income, we have that option available for you as well.
So I'm still why was mom not covered? What happened?
Well, I personally want to review the policy before my term, addition, but now that I've been exposed to policies, that there was probably a rider on there and it expired.
Oh, so she was covered by a
For
rider.
a certain period of time.
Kind of like that. I have a coverage, but if I had an accident, it expired, and I was reserved it. I don't want anyone to tell me anything about that.
Yeah.
All right.
That's unfortunate, but again, we review it every year, so we can avoid from. It's not bad to apply for a certain amount of years, because things happen. People get divorced, they get changed anyway. So just reviewing it every year will be good.
So the thing, Patricia has showed me that we're here to educate you. So let's just say I'm like, okay, Patricia, I have a policy. Do I have any riders? If you're unsure, like, what is the rider? Is she talking, Patricia? You can always be like, okay, Patricia, Diana, whoever. Just an FYI, there we are. Just an FYI, I'm using my new products.
Yay! So let's not commingle
Yes,
efforts.
that's why I just said my new products. That's it. Okay, so going back to, so what I was saying is, like, I mean, there's a lot of us who don't know anything about life insurance policies. So, or you may be like, oh yeah, you know what? I know about the life insurance policy. It's when you die, you have coverage. Not necessarily that anymore. That's why we are called the new insurance, right? Is that correct?
The new life insurance.
The new life insurance. So, with that being said, that's why I'm saying, like, if there's anything like you, I guess the best way of asking is like, is there any add-ons to my policy? This way, you will know, like, what else do I have attached to it? And if they say, yes, Patricia, you actually do have an accident
Policy.
rider attached to it. Then you want to ask, when does that expire?
It's just like when you buy a car, you get an extended warranty. It's not forever, right?
Right,
That's basically what a rider's like.
right. Very good way of putting it out there. Okay, so now the next question. Do you, oh, no, that's the one we just answered. Now, I don't know if you're aware of this or not. I wasn't aware of it, but because I had a term policy, and so I was not aware. But if I borrow money from my policy, do I have to pay it back? And if I don't, what happens?
What kind of policy do you have?
Well, no. And I'm just asking,
general?
like, if I had a policy that was making money, could I borrow from it? And if I didn't pay it back, what would happen? And I guess at the same time, if you can tell us what kind of policies is there that you can actually make money with?
Well, you can make dividend interest on your whole life policy. The dividend interest is not a specific amount. It's not guaranteed that you will be making it every year, but it is some additional income that would go into your policy if the carrier had a good year. If the carrier has a good year and they have extra, as far as, what they were expecting to make, they'll divide that into the folks that have the possibility of earning, and you'll get that deposited into your account on an annual basis, or it could be monthly, annual, quarterly, whichever. Now, there's also the Index Universal Life. That one has a separate account built within the same account that it's like a savings bucket. And what it does, it starts to gain equity. Just like when you purchase a home, it's let's say 200,000, and you start paying into it, it becomes, you've got some equity available, then you can do what's called a home equity loan. Well, unfortunately on those you got to pay it back, but on your life policy, it depends on what age or what stage you're at in the policy. Some require that you have it for 5 years, 10 years before you can actually borrow into it. Some 1 year, it just depends. But you can borrow against the policy. When you borrow against the policy, it's your option on whether you want to pay it back or not. Because remember, you're not borrowing against the policy, you're borrowing against the equity in the policy. So that means that's your money. You built it up already, right?
Is that the permanent one?
That's the permanent product, yes.
Okay.
Up to age 121 years.
And so when you talk about dividend, I'm listening to what you're saying. If the company has a good year, then they get a little extra. So is there a flat percentage that they get all the time?
Not on the whole life.
Not on a whole life.
No. And the Index Universal Life either, because that's attached to the stock market or the S&P, depending on what fund you decide to attach it to. And it just depends, because if the market's up, you can gain up to 10%. If the market drops, then you have what's called a floor. And normally the floor is 0, which means you'll gain 0. You're going to make 0, but you're going to also lose 0, which is guaranteed 0 losses.
Awesome. That was going to be my next question. I'm telling you, good minds think alike. Oh my God. All right. So, does my policy policy double for an accidental death?
It just depends. Again, that could be something that's a rider. So a lot of carriers do include it, but it just depends. So that's another thing that you want to make sure you ask that question when you're obtaining a new policy, and you want to make sure you ask that question whenever you're having your policy reviewed.
Okay.
Because no, not every policy carries.
Okay. And so the other thing that I understood from the company that I was with, when I mean the company that I was with, meaning like my insurance policy I had before, my accidental policy was a rider, and I was being charged for it. Now with PHP, is that the same way we do it, or
Like I said, it depends on the carrier. Because PHP, we are not an insurance company. We're a financial marketing organization. We contract with different companies, and it depends on what that company offers, right? So it's not, it could be a rider, it could be included. It just depends on how that company structured their policy.
okay,
But a lot of us do already have it included, and it's not an additional rider.
And does it expire at the same time, or
No.
is it just like any other that it could expire before your?
If it's included, it's probably not going to expire because it's already included. But if it's not included, then that would be when, yes, the possibility of it expiring would definitely be there.
Okay.
Again, get with your agent every year. Make sure you're reviewing those policies and write down these questions, because if you hadn't thought of them, they're good questions to ask.
Yes, they are. And never feel like, oh my God, it's a dumb question. Because believe it or not, it may sound dumb, but
Dumb is not to
more
ask it.
more exactly. But you'd be surprised like how many people want to ask it, but they're thinking the same thing you're thinking. That's a dumb question.
Right.
You know? I've told Patricia that before too. Like, I have a dumb question, and she's like, "That wasn't a dumb question. That was actually a good question."
Yes, ma'am.
So, and then can I have access of my policy online?
Can you have access to your policy online? Some carriers do have the capability. Some are still a little bit behind in the times. So far, all the carriers that we're appointed to, yes, you do have access to view and make changes, make a payment online.
Awesome. So keep in mind, it's all with patience. So if you're like, you know what, Patricia, thank you for giving me your time, but I wasn't really too happy, and you just walked away. Don't do that. And I'm sure it's not gonna happen, because Patricia's gonna ask you some questions like, wait a minute, what happened? What did we not answer for you? What made you feel uncomfortable? Remember, there's over 200 companies that we can connect with and get you what you need. So don't ever feel like,
True.
I don't know, like, I don't think that was a great deal. Let us know, hey, I don't think that was a great deal. And we'll let you know why it was that deal and things like that. So,
So,
go ahead.
well, sometimes people walk away because they think, oh, I can't afford it. There's too much on my plate already. I can't add more to my plate. We have a program called Debt Solutions, and it's PHP Mediator Debt Solutions. And what this company does is they take all your existing accounts that maybe is what, you're overextended, and they turn them in, they compile them into one account. They work on your interest and lower the rates, and they give you a one payment, and then they will also give you a loan to pay off that one payment if you've been making your payments consistently for 6 to 12 months. So it's not forever. Yes, in the beginning you may have a little bit of struggle because of the fact that you're not you're in process of getting everything worked out. But once all that gets worked out, you're going to be in a much better position, be able to breathe and have your financial protection. The financial protection is so important, especially if there's only one breadwinner in the family. If something were to happen to that person, what's going to happen to the family? They're going to lose their home. They're going to have to file bankruptcy. They may even end up homeless. I mean, I've talked to people that have gone through these scenarios, these situations. And honestly, if you're around the age of 30, you can very well get a policy for under $30 that will give you the protection that you need. I mean, like $500,000 for $30 for a 30-year-old. Okay. So if you cut out going out to eat once a week, you can afford it. You can definitely afford it. It just depends on what's mostly important to you.
Right.
And now the policies that we offer, they all come with living benefits. And that's, going back to why we call ourselves the new life insurance, because prior to 1980, there was no living benefits. You had to actually pass away before the carrier would be able to, give you or give your family, because something happened to you already, right? So then the payout would go to the family. And now, if something happens to you, you can't feed yourself, you can't bathe yourself, you can't do two of the 6 basic functions that we should be able to do for ourselves, you can file a claim while you're alive. And you can get up to 90% of the amount that your face value is at. If you get cancer, if you have a stroke, if you get Alzheimer's, dementia, how many people are suffering with cancer nowadays? How common is it?
Very
and then again,
common.
it just depends, because you've got stage 1, 2, 3, 4, if it's stage 4, obviously you're probably going to be able to get a payout. If it's stage 1, a little skin cancer thing, well, you'll probably get something to take care of your medical expenses, but it wouldn't be the same. I don't think they would give you the 90%. But I'm just trying to basically, do a reality check.
So when you get 90%, I'm not very good with numbers, so maybe you can think of numbers in your head as I'm asking this question. So you get 90%, and let's just say the unfortunate happens, and you didn't put no money back in. What are they looking at for when their loved one passes away?
Late sales, GoFundMes, asking people for money. When you've already lost a loved one, that's the last thing that you want to be doing, right?
Mm-hmm.
So, you could be just paying $30 a month or less. I have a 31-year-old, and I think it's 50,000, and I pay $14 a month. And it's just peace of mind. That's 3 Starbucks coffees. Not even, maybe 2, right? If I get that venti.
I have not gone since the inflation. I like Starbucks, but I usually go when I need a hottie toddy.
I don't know what that is.
A hottie toddy is it's a hot tea.
Oh, okay.
And I don't know if they put medicine in there or not. I don't think so. I think it's just called a hottie toddy. But when you're sick, girl, it just like opens you up.
Wow.
And I tried buying all the teas because I looked it up on how to make it. Even on Amazon, sold out because
Wow.
I guess because it's during winter time and it just sells out like crazy.
Wow.
But so going back to my question one more time, I don't know if I asked it right or I didn't understand your answer.
Okay.
So our client has cancer, so he starts getting money, right?
Mm-hmm.
Starts taking on the money. But then let's say 2 months later, he passes away. Is there funds still for our client to be able to
It depends,
finish
because
off the final expenses?
the policy has 100% in it, right? So it depends on what you qualified for. If you qualified for 25, you took 25. You didn't take the full policy. But if you took the 90%, whatever was eligible for you, then it's gone, right? Mm-hmm. Yeah. So you have to make sure that you allocate for those expenses and set it aside, right? Because when you do have access to making this claim and they pay it out, It's up to you what you do with the money. You want to go on that dream vacation because, you know, you've always wanted to and you just never did and you have the money now. I mean, it's your choice. It's your choice what you want to do with it.
Okay. All right, and then I'm going to ask some basic questions that we probably already have asked, but I think it's important that we go over these just because people may be watching, people may not be asking questions because they're like, oh no, don't ask Patricia or Diana because they're going to come attack us and they're going to want us to, they're going to want to meet in person and I don't want to.
No.
But guys, remember, there's no commitment and there's no there's no obligation to purchase, and we will sit there. I mean, if you want to sit us there with you for an hour because you just really can't get the answer, we will sit there with you. So just know that, okay? So another question. What is the youngest age we can have someone covered?
14 days of age.
14 days. So we're talking about a newborn, 2-week-old. Okay.
And why do you want to do that? Because age, health, weight, and medical history are 4 factors that are calculated into your premium. That's going to be the youngest you're ever going to be. When you're going to be able
the
to,
cheapest too.
and that's going to be the least expensive.
Yeah.
Because the older you get, the higher the premium. So why would you want to pay more if you could get it when they're younger, right? And then that premium stays with them for life. Unless they make changes, then they recalculate based on age. But like I said, that's going to be the least expensive. So
and then they're already within the company, right?
Right, and you invest, and then you're also preparing that child not to have another medical exam. So if you get that child their policy while they're 14 days of age, and they develop something, you know, I've had situations where a child had to go in because their intestines are not working properly, and they have to go in and readjust them or cut a piece or whatever. And then they end up with additional ongoing medical issues based off of it. You know, you never know. And then you have that policy. If they get cancer, they're, you know, I always express this because people just don't think about it. If you get cancer, there's a lot of medications out there that are in a trial basis. But yet, the people that are being used for these trials are people that have cancer actively. When you have it and you are surviving on a trial medicine, obviously, if you are, you know, in a medical situation where you have the cancer and you're not in the trial situation, you want to try the trial medication because it could save your life.
Exactly.
Well, insurance doesn't pay for it because it's a trial medication. And that's where your living benefits can also save your life because you can have access to applying or placing a what is it called, a claim on your policy. You'll get the money and you can pay for your trial medication and possibly save you or your child's life.
Is there ever an age where it's too late to buy a policy?
Yes, age 85, it's no carrier will take you over age 85.
But what if my grandpa's 85 and he's super healthy? You still won't take him? Okay. All right. And those
That's why it's better to plan.
Right. Oh, I know another question. So let's say mom and dad, they're really thinking, planning ahead, and they're like, you know what? We just had a child. Let's get our child covered, and we have baby covered at 3 months old.
Okay.
And normally couples are normally together, right? Unless they're hustlers like us, our husbands are there and we're over here, and then we meet later, you know. But so let's just say that no one knew of this child's policy, and mom and dad had an unfortunate accident. Like, how does this child know that there's a policy? Is there like, is there some way like
Well, normally, in our case, in my case, I can only speak for me as an agent. If you have a child who's under the age of 18 as a beneficiary, we ask or we try to educate you to place an adult or create a will, because that's what's going to identify all your assets and who they need to go to. Because if it's a child and you didn't take those extra precautions, then it's going to have to go through probate court, and that could take a long time. I think Prince, the singer, he didn't have a will, and it took his family, I want to say like 3 years to be able to get that money.
Wow.
Yeah.
So yeah, I mean, you may think, like I said, once again, you may think like, why is Diane asking those questions? Isn't she in this business too? Because my mind is sitting on your side right now. My mind is sitting on your side right now and thinking like, okay, what are some questions that people may not ask? Or people may not think. Like a lot of the times people may think like, why do I need whatever?
I just had another agent pass. Ding, ding,
Yay!
ding,
Ding
ding,
ding
ding,
ding ding. Ding 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 ding. That's really exciting. Who was it?
Crystal. She's with Sony.
Oh, okay, great.
Yay!
So yeah, the team is growing, guys. Oh my God, I'm so excited about all this. Like the minute I joined, boom, 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 boom. I got 3 agents, under me. So
And we're always looking. Actually, right now, I'm in a challenge, and I need to educate 15 folks on how to create additional wealth. So if you are interested or looking to make some additional income without it impacting what you're doing today, please reach out, because we're here and we're willing to educate you along the way to make sure that you're successful with that exam. Actually, today we had a licensing class here at the office at 8721 Box Lane at the Evolve Medical Group. We had a training class going over everything step by step, like Diane was mentioning. There is no dumb question. So your success is our success. So if we make sure that you're clear about what all this information entails, then we're pretty much setting you up for success. And now the education material is $199. We have a discount code where you end up paying $19.95. So, I mean, not everybody gives you that discount. So please reach out. It's an opportunity that's not going to impact what you're currently doing today. It's not like you've got to quit or you've got to do anything outside of the norm except for take an exam. And why is it take an exam? Because the carriers cannot pay you unless you're certified by the state to have the education that you need to explain something, right? Now, you don't have to be a pro, you just have to pass the exam. And then after that, we will actually work with you on the job training till we get you to where you need to be. Because we work in team fashion, which means I'm always going to be side by side with you. I'm never going to be too busy or, uninterested, because you're part of my team, and my team's success is my success.
Right. Very true. So I don't know if anyone has any questions. Let me go to my page where I shared as well. Sometimes there'll be questions on the other end and we don't see them. Let me see here. Okay, I don't see no question there, but I do. Let me see. So yeah, that works for both of us. We both are trying to get all this education out there. It's really important. Like I said, I've seen it already. Probably this year, I've probably already seen like 4 to 5 GoFundMe.
And we were just recently informed too. Remember, somebody that we were talking to, they said that just happened to me. My dad passed away, I think it was, and they said, and the aunt or someone did a GoFundMe. They don't even give you the money up front, and they take a chunk of the money from
Yes,
you.
yes.
So that's a business, and this goes out to folks too that have parents, aunts, uncles that possibly you're going to be responsible to put something in. Folks, the least amount on a policy is $2,000, and the payment on that is not a huge impact. So if you know that you all are five siblings and everybody's going to have to put something in, isn't it better for you to pay $30 a month instead of having to come up with $10,000 in one day? I think so. What do you think?
I think so too. And the thing is, maybe 1 month you can't pay it.
Mm-hmm.
Let your other siblings or let the other sibling pay it in full, and then the following month you pay it in full. Because like Patricia said, at the end of the day,
Mm-hmm.
somebody's gonna have to pay for it. What are you gonna do? I mean,
Right.
honestly, what are you gonna do for your parent? Are you just gonna allow them to just leave their body at the hospital? The
Or
hospital's not
at the morgue,
at the morgue, yeah,
because that's where they end up leaving the bodies. It's horrible. I mean, I think I would have nightmares about thinking about not picking up my parents' bodies and not even knowing where they ended up because I was irresponsible.
and another
Scary.
thing too is like, okay, um, my dad didn't get me nothing when I was 14 days old. I've already made it to 25, Patricia. I think I can do up to 30. What do you think? Well, we can't answer that. You can't even answer that because we don't know. We don't know when the day is marked in the book for us to be at void.
Right.
So another thing. So I'm known as a warrior, not a warrior, a warrior. One who always worries and worries. One who sometimes thinks negative thoughts, like when I mean negative, because I like to be a positive person and I like to hang out with positive people.
Mm-hmm.
But this is my thought. Like, so I've been talking with people and they're like, girl, I got it. I have insurance at work. So that's a real big thing. Everybody, oh, I have insurance at work. My thing is, because I know it's happened and maybe not the same way or not the same situation. I'm going to give us an example. But Patricia, I want you to come into my office today after lunch. So Patricia comes in. She's like, hey, maybe I'm getting a raise, or I wonder what they want to talk to me about. She comes in and they say, I'm sorry, Patricia, but as of 12:03, you are no longer needed. What happens, guys? Honestly. Okay, not you, Siri, not right now. I was like, what? What happens? Like, we just stay in shock because you didn't expect it. Or, I'm sorry, Patricia, but the company closed down as of yesterday and you're still working there today. Guess what? I'm sorry, but you're not getting paid for today. So more than likely, if that's really happening within the company that you're not getting paid today,
You're probably never gonna get paid.
you probably don't have that insurance coverage that you're thinking that 210,000 that I have there because I worked there 3-4 years already. And then you go home and you're just like, and what if something bad happens? Those are the times that I feel like we get caught off guard because our mind is not where it should be, and unfortunate things happen. And
and those moments, like, and I can speak from experience because I have been actually uh, furloughed twice. I was fortunate enough to be a good enough employee that I was rehired, but not knowing when they give you those words and they tell you we restructured and your position is no longer a part of the restructure, you're like, the things that start coming through your head are like the bills, the house, the car, the kids, and you think, oh my God, what am I going to do? You're not even thinking about the insurance, but yeah, you needed that insurance because, a lot of people are already having, pre-existing conditions, and you could have a heart attack, you could have whatever, and you end up without anything. and not, yeah, a lot of people say, well, my employer said I could take it with me. Yeah, but make sure that they're not going to charge you 3 to 5 times more than what you're paying today. I'm not saying don't take the insurance that your employer gives you. Yes, take it because it's free. But if you're having to pay additional into it, pay on something that's going to be yours forever, because your job, you're not planning on staying there your whole life, right? So
No.
make sure that, there's policies out there that grow for you. You can increase the protection. You can provide inheritance for your grandchildren. There's a lot of things that you can use it for. You can get a grandchild a policy today, and maybe they're not going to need it for additional education. Maybe the parents got that, but maybe you can help them give a down payment on a home. I've heard of different scenarios. One of the gentlemen with American National, he told us, his grandchild didn't need it. I mean, he personally didn't need it, but his grandparents left it for him. And when he was in college, his car broke down, and he thought, "Oh my God, I have this." And my grandparents said, "Guess what?" He was able to get a new car and finish his college education. Not have to
Worry about that.
stop because he wasn't going to be able to have the transportation. Yeah, so there's lots of things that when you have insurance, it definitely gives you peace of mind. I remember paying that extra for the home appliance policy that you get offered, and it was only $10 or something like that, but my furnace burned out. That was a lot of money, and it paid for it. And my husband was like, "What are we gonna do?" And I told him,
Your life insurance
guess
policy
what?
paid for it?
No, I had the policy for that protection.
Oh, yes, yes,
A
yes.
policy
Like the
itself.
house with
Yes,
the appliance
yes.
policy.
And I said, "Well, I have this. I've been paying on it." They paid for the whole thing. And another time, my washer broke down. They gave me a new washer. So that's what insurance does. It's a peace of mind.
Right.
Now, of course, you have those policies like the Index Universal Life. Nowadays, folks are using that like a 401k because, like we mentioned, it builds equity. And you don't have to wait till you're age 59 and a half to have access to it. You can always borrow against it and then pay yourself back or not pay yourself back. What happens when you don't pay yourself back is that amount just comes off of the face amount. If for some reason, you happen to expire, well, then that when your beneficiary gets the money, they'll just deduct that money off of it. So the equity is definitely yours. We recommend that you borrow against the policy instead of withdraw. Why? Because when you borrow, you're actually not going to have to pay taxes. Who pays taxes on loans? Nobody. But if you withdraw, that's income. And so Uncle Sam's going to want his cut. Yeah, so that's just a little bit of knowledge there to make sure you make the right choices. As like everything else, the only reason we're here is to educate and provide some additional knowledge. As well as we also have indexed annuities accounts, which an annuity is an IRA, an individual retirement account. If you currently have a 401k with your employer, and you can't reallocate it, well, you don't really have a choice. But if you move from employment and you have a 401k sitting there in the bank, is susceptible to losses of the market, the annuity is going to protect you with, like we mentioned, that zero floor where you can't lose anything, and you're going to gain up to 10% interest. You already still just have it there sitting. Why not get yourself more money for it? So definitely reach out to us. All we need is a statement to do that research for you and to give you an illustration and let you know how much you would make for having it in an annuity versus having it in a regular bank.
And that's before you even move it.
Right. Right.
So so let's just say somebody was working somewhere and they were vested already, and I don't know what is the least time that you can work somewhere that they could still move their 401k. Like, so if they were there 3 years, and let's just say maybe it was only $5,000. Can they still do that?
Mm-hmm.
What's the least amount? Do you know?
I wanna say it's like 2,000. I
2,000?
wanna say, but the different carriers have different amounts, so honestly, you know, if you bring that statement, we can do the research for you and let you know for sure. I don't wanna guesstimate and then give you the wrong information,
Right,
but I can definitely get you the right answer if you reach out.
right. All right. Well, guys, it was nice being here with you. Like I said, our Q&As are not to stay here
Hi,
2,
Miss
3
Sylvia.
hours with you. How do you know she's there?
It says over here, Miss Sylvia's watching.
Oh, okay. Hi. Did we answer your questions?
You're gonna have to rewind and watch so we can, you can have your questions answered.
Yeah, so we're trying to keep this Q&As under an hour.
Mhm.
So once again, like I said, you can ask the questions on my page. You can ask them on Patricia's page,
Mhm.
on the business page, or on our timeline. Or if you want to be very private about it, we can respect that as well. And we'll just come out here. We're not going to say, okay, today, Sylvia Luna asked this question. No, that's not what we're going to do. We're just going to be like, okay, today's questions are, and then we're just going to go about our business and ask the question. I'll ask the question to Miss Patricia, and then we'll go from there. So I don't
Yeah,
know.
because definitely if you have that question, chances are other people out there have them as well.
So before we go, guys, I want you to remember. So we do not go knocking from door to door to see who wants to for us to review their policy. Very, very important. Once again, don't forget, if your policy has not been reviewed within the last from the last 6 months to a year, let us review it for you. I mean, like I said, you don't have to move. Maybe you just want to know, now you're curious because you're like, well, what's going to change? There might not be a change on your actual policy, but there may be something else that we can offer you cheaper, same that's actually the same coverage with your riders being not added as a
Or it could be like a
fee.
higher face amount for
Yeah.
the same premium or a lesser premium for the same face amount.
Yeah.
We could do that. And then you don't want to wait, especially, you know, check on your parents, check on your aunts and uncles, check on their policies because, like I mentioned, these living benefits came into play after 1980. They weren't available prior to. And if you can get them that additional coverage, why not? You know, there like I don't remember if I mentioned it today, but there are carriers that cover for Alzheimer's and dementia. So you know, a lot of folks are definitely being affected by that today, and why not provide that for them if you can? You know, it's definitely just a part of planning, taking that step, caring to do it. Our services are completely free. We just work by appointment only. So definitely reach out and we'll be happy to help you.
So we do see also unforeseen things happen, but if you do set up a Zoom with us, you schedule something that we're actually doing a one-on-one. If you set up a time, if you can please follow through, just because I have to stop and go get Patricia, and maybe somebody else in training was able to use her and you just didn't show up just because you just wanted to tell me yes because you felt bad. It's okay to say no. It's okay, you know. But we also want you to know that we appreciate your support when you do come and hang out with us and just hear us talk. And like I said, it's just a learning. How do you call it?
Opportunity.
Yeah, a learning opportunity for myself today here. It's another learning opportunity. You see me, I'm asking the questions, she's answering them. I may know some of them and I may not know some of them. So it's a learning opportunity for everybody all around. For myself, Miss Patricia, you know, she's my mentor. She's going to know the questions and the answers. But also for you, you may not know the answers, you know, or you may think you knew the answer and I see you and your significant other. I told you that you were wrong. I told you. You know, but at least it got cleared away. And if you need to correct it for yourself or for whomever may need it, you can do that. And another thing, don't forget to hit that arrow, the one that goes like that. And that's the SHARE. I know Facebook doesn't like us to always use that word, so I'm spelling it out. Because we work by referrals. We work by referrals, and we love doing what we do. So
We sure do.
we would totally appreciate if you can share it out. I just said it again.
Yes. So
And
remember, Wednesdays is Wealth Building Wednesdays.
Mhm.
Every Wednesday at 7 p.m. Be our guest. Come out to 8721 Box Lane in San Antonio from 7 to about 8:30. We will provide you with additional information. No commitment to purchase. No obligation to do anything. If you're not able to come out, maybe you're not in San Antonio, every Monday, we also have the opportunity to get you on a Zoom. It's not going to be one-on-one, it's a group, but it's about learning and us sharing and you having more options. So you don't have to speak, you don't have to show your face, but do let us know that you want the information so we can sign you up and we can count you in, and that way we can know who we were working with. So every Monday, at 7 p.m. is the business opportunity meeting. We talk about the different products and their structures. And we also talk a little bit about what it would take for you to make some additional income. On Wednesdays, the same thing, except that on Wednesdays, we also provide training for our existing agents here in San Antonio. Yeah. All right. Well, with that being said, guys, happy weekend. Wonderful. Have a wonderful rest of your Saturday. Thanks for tuning in, and we're signing off. Peace and love.
bye, guys. Thank you.